Hel- Hello, everybody. Welcome to this very special webinar. It's really good to see you all here. My name is Mike Supervici. I'm the head of acceleration at Desol Group. Desol Group is a company whose primary purpose is to help new and emerging managers thrive. And we do that in a number of different ways. We have an accelerator called VC Lab. Everyone on the panel today is a top alumni from the VC Lab Accelerator. We have a set of tools and systems called Desal Hub that's become more or less the operating system for venture capital. We have a back office solution as well as a fund of funds. And that's sort of how we kind of go and try to help. But the number one way we really try to do it is we try to sort of make a lot of the content with related to venture available to as many people as possible. And we host webinars like this. So if this is your first time joining us for a session like this, welcome. I'm really excited to see you all here. We want to make these sessions ultra interactive. So make sure that you ask questions, you can introduce yourself in the chat here in Zoom, say hello to us and things like this. And then what we're going to do here is have a conversation about the topic of the day, about sort of transitioning from being a founder into, a venture capitalist. Obviously I have a lot of questions for the panel here, but, we'd love to kind of make this as interactive as possible because we're doing this for you. Before I introduce the panel, however, let me just quickly read sort of the classic disclaimer that you sort of see on webinars like this, that, this is not an offering, this is not, this is presented, is not directed at investors or potential investors, and it's not, does not constitute an offer to sell or a solicitation or an offer to buy any sort of securities. Okay, so now that we sort of got that clear, we're kind of ready to go here. Let's go ahead and get started with introducing the panel for today. So maybe we can just start with you, Pratik. Can you maybe introduce yourself for everyone here?
Hey, thanks for having me, Mike, and so good to see all of you, the other panelists, and the audience who I can't quite see. My name is Pratik. I'm the managing partner of Ahead VC. I've been a founder in the past and an angel investor. I've lived in India and the US. I bring a lot of a deep technology background to whatever I do. Really enjoy working with startups. And when I'm not working with startups and founders, you'll see me either hanging out or looking for an interesting coffee shop wherever I am. And also deeply into science fiction. So if there are any sci-fi nerds out there, please shout out. We'll have a side chat about that.
Very cool. Linda?
Good morning. And yeah, thank you, Mike, for this opportunity. Great to see you guys. And like Pratik said, we don't know who's in the audience, but excited to have this interactive session with you all. I'm Linda Avey, and I'm a managing partner at Humane Ventures. And I come from a pretty long, I think I'm one of the older people that's part of the cohort I was in, but I've been in sort of the life science and bio area for most of my career. And I've started several companies and really enjoyed being a founder, and never saw myself in this role of being a venture capitalist or a vulture capitalist, as we like to call them back in the day. And we're trying to take the vulture out of that. And what we really appreciated about VC Lab is the mensarius oath that we all sign when we start. My partner and I came into this thinking that we wanted to be ethical investors. And so to see a matching of values with VC Lab was really great for us. And so we couldn't say enough about the program, and just happy to answer any questions people have about this transition.
John?
Great. Yeah, great to be here. Thanks, everyone. My name is John Whaley. I'm managing partner of Inception Studio Capital, and I guess a three-time founder in cybersecurity as well. And yeah, so it's this has certainly been a fun ride. I couldn't actually even give up my founding thing, so I'm still continue to found the company while also doing being a VC, which is an interesting combination there as well. I couldn't really give up the operational roles either, because I love it so much. So but yeah, I'm really looking forward to the panel and just answering any questions anyone has about it.
Well, maybe we can just start right there, John, since you sort of introduced this, like, well, so you've been three-time founder, and you're like already sort of like, deeply in operations to the point where you sort of like can't give it up, so to speak, can't give up the
Yeah.
addiction. From founder to founder, I totally understand, but what inspired you, right, to sort of make this leap? Like you could have just kept doing this like all the time, forever, right? And what made you inspired you to start a VC firm?
Yeah, I mean, so the backstory for me was that I ended up, myself and then my partner Mike Morris, I ended up starting an accelerator program, for early stage founders to really help, people like us, like to find their next things, like to find their next whatever their next stage in their career, and for many people that was starting a new company, and so we started an accelerator program that ended up being quite successful, and then helping many founders meet co-founders and then, ultimately get incorporated and start their companies. And then through this, this is kind of how we ended up saying, well, actually, there's a big opportunity here to be able to fund some of these, startups and these people that we know that are, really exceptional entrepreneurs. I think they're likely to be successful in their next ventures, and especially for experienced people, it's tricky to get into those deals, honestly. I think 90% of the funds that a serial entrepreneur raises are from people that they already know, and investors they've already worked with in the past. And so it becomes really challenging to be, okay, well, I like these serial entrepreneurs, people who are experienced founders, but to get in relationships there early, you either have to have been in the Bay Area or Silicon Valley or the ecosystem for the last 20, 30 years and have a lot of relationships there, or you need to do something kind of like what we did. And so it's been quite successful so far. We had quite a few companies come through so far, and then now we're kind of taking the next logical step for that journey, which is like, okay, well, let's form a fund to be able to invest in some of these companies that come through the program.
Linda, you mentioned obviously very strongly the ethics component and things like this, but kind of, what inspired you to start a VC firm in general?
Well, it's partly, I'm very fortunate that I get asked to be an advisor to really interesting companies. But a lot of times I don't feel like the companies really leverage that, that relationship as much as possible. And also I wanted to be able to scale that in ways that I couldn't really, if I could go out and ask companies, do you need advisory help? And it was partly that I wanted to get more involved. And I think doing it through investing is a great way to really get to know a company, get to know the team and what their requirements are. And I think the part also that we've seen with the big reset that happened in investing is that, I think when there was a lot of money, there was a lot of opportunity. We saw a lot of what they call spreadsheet investing, where it was sort of like, I felt like the venture community was sort of driving how the startups should progress, rather than what do the startups actually need to get to that next level. And so it's been really illuminating too, with my partner Anil and I, when we talk to companies now, they're so amazed how much we know about their industry and we know about their science and their, just their whole approach to building either a biotech or a consumer health company. It's really been wonderful for us to be able to impart what we've learned over the years. And so it's been an easier transition than I expected, and we're super excited to keep it going.
Pratik, how about you? Love to get your kind of journey and how you've decided to start a VC firm.
No, so I was kind of vigorously nodding around as John and Linda were kind of sharing their journeys, because there's definitely some shared patterns there. It was a very organic path for me in some ways. I had sold my company and moved to the US. So it's like a free bird, a free radical, kind of hanging out with other founders, advising, angel investing. And in some ways, angel investing after the founder journey kind of became like this MVP project to kind of really understand what investing is all about and what other founders needed in their journeys as they were kind of building companies. there was a lot of this organic inspiration that was happening just because I was angel investing. And along with that, I think there was also this reflection on what my founder journey was, what I expected from investors who work with me. And there was this desire to kind of build the investor I wished I had. And I think a couple of these factors kind of really played in for me, kind of understanding both what's happening in the India startup ecosystem, how founders are kind of now starting to build for beyond India and like for the whole world. So there was that massive trend which is kind of happening there. And combined with that, this desire to kind of build I'll say the perfect founder investor who kind of work collaboratively with new founders, help support, and really kind of open doors in a market which is otherwise not as easy to access. So 2 or 3 of these factors kind of came together, and I think of problems in like a very founder-centric way. I kind of look at problems and I kind of try to kind of build solutions. So in some ways, the VC life was almost like a problem and a solution. Like I didn't necessarily want to kind of become an investor, but this was like the right problem solution fit for the space that I was kind of interested in, and that's how it all kind of came together.
I feel like when we first started working together, Pratik, you were trying to like almost make this like a problem solution kind of thing. And I was like, no, man, like, VC doesn't really work like this. You can't do like the classic problem solution thing that you do as a, but that being said, I feel like this trend of like the investor I wish I had is going to sort of kind of like resound a lot throughout this entire panel for like the next hour. If I had to predict something, I feel like that's definitely a big component here. Linda, you mentioned, the opportunity, right? That you sort of see. I'm just curious, what opportunities do you think are like really interesting right now, or you're particularly excited about in general? And I'd love to obviously then get your thoughts on this, John and Pratik next as well.
Well, the buzz around AI has been intense, and we've seen a lot of investment in true AI companies. But what we see in the bio space and in tech bio is that AI is just a tool, but it's such a powerful tool to start to figure out biology. It's such a complex field. They're, computationally almost impossible for humans to do now, is impossible, I would say, for humans to do what AI is bringing to the table now. What humans are really good at doing is generating data. And that's really the first piece. And so, we're looking for companies that are really doing proprietary data generation and then applying AI to that. And we're just seeing companies all over the place now. And in fact, if you're not using AI in your platform, you're going to be left behind. And so we started out with a thesis that we were investing in AI in tech bio. And the more we looked at our thesis, and what VC Lab really helped us hone was, we're actually looking for companies that are category defining. So just, take AI out of the equation because it's just ever present. But how are companies actually leveraging it, and what is the data they're creating to build whole new ways of creating drugs, of really shortening that process through the regulatory hurdle that everyone has to go through. There's no getting around that, but there's a lot more intelligence that we can bring to that process, we believe. So that's what we're most excited about, I would say.
John, I'm sure you have a lot of opinions on AI in general. Is there any trends in general that you're super interested in or excited about right now?
Yeah, I mean, I'm in a kind of a interesting privileged spot just because also, so I'm on the faculty at Stanford as well, and I taught like one of the more popular classes, in the winter quarter, which is about building applications using large language models. And so there's obviously a huge amount of excitement around this, and for good reason. I mean, there are now capabilities that, just a few years ago that were just not even possible, and they are now. And I think that makes it, a lot of entrepreneurs are extremely excited about this, and they see these type of opportunities here. I mean, that being said, I think we are in a bubble around this right now, and there is and you do, so you have to be very thoughtful and selective about what type of companies that will, you're maybe interested in investing in. Yeah, and then and there's some things that we look for. I mean, first of all, making sure that like these that they're starting with a problem and a real problem to be solved, not just here's my magic hammer called GPT-4 and I'm gonna go try to find nails to bang on. Like they have to make sure that they're solving a real problem where there's a burning need and customers are willing to pay for it, right? And this is not true of many of the companies there. We focus on we tend to have quite a few more serial entrepreneurs, like people who are experienced founders than some others. I think that there certainly are some benefits to being an experienced entrepreneur, both in terms of having been there and done that, but also in terms of having the network, both in terms of being able to scale the company quickly, also to get customers and in many other areas as well. So I think there's certainly benefits to starting your company a little bit later in your career, comparatively. And so this is an area where we have particular interest there. But no, it's extremely exciting. I'm sure there's there's going to be at least one more trillion-dollar company that's going to be founded this year, next year, in this time frame. And multiple $100 billion companies are going to be founded in this time frame, and that are gonna go and revolutionize some various industries. But we're also in a bubble, and 98% of the companies are not going to survive. And so, like, the trick is how to pick those the right ones there.
Prateek, how about you?
Yeah.
What are you...
I'm going to say what everyone said. AI is definitely like a big focus area, and actually to echo what John said, I do think that AI broadly is both overpriced and underpriced. I think some spaces have kind of seen an overabundance of competition, and like more and more companies keep getting created. And I still feel that if indeed this wave of AI is as consequential as we all believe it is going to be, a big pool of applications and businesses are still in front of us. They'll get created over the next decade. And in those, with that lens, I do feel that there's a lot of opportunity. I personally focus on B2B software, and within that, I pay a lot of attention to founders, so kind of thinking deeply about business applications using AI as a core functional piece within that solution. So again, the problem solution, like what are you solving? Who is it important for? Do they have the budget for it? Why is this important? How will you kind of create a business case? But really reimagine the solution, reimagine the category. Don't kind of latch on just another Copilot on top of like an existing database. Like think deeply about like now you have a cool new tool in your tool set. So like think deeply, reimagine. That's really what I'm looking for. So again, to kind of summarize this, B2B applications, that's where I think a lot of opportunity kind of resides ahead. And then looking for founders who think deeply, understand deeply a space and a problem, and love the problem more than like this tiny little tool called AI, and like really see AI just as a tool to solve a problem well and reinvent a category. I think that's where a lot of interesting opportunities lie.
And Mike, I might just throw in really
Linda.
quick, since we're on the topic of AI. I mean, I think we all know this bubble we're in, and we've seen a whole slew of companies that are building on top of the existing large the LLMs and the stranglehold they kind of have right now. We're really excited about what's coming next in the basics and the fundamentals of AI. And if you look at transformers, they're not perfect by any stretch of the imagination. And what's going to be the next phase of AI? So to be keeping an eye on that and see where the whole field is going is also on our radar. Because if you're trying to build a company on OpenAI, I would run away from that as an investor, because OpenAI could just cut you off and they could build it themselves. And so this is something that we learn through experience, that if you build on top of another company, that's a really hard position to be in. And so what are the newer forms of AI that are coming that are going to be cheaper, faster, use less power? That's something that I think is going to change the industry. And so it's sort of a side thing for us to be keeping an eye on that in order to help our startups. Like what are the new things that you could be trying when it comes to the AI tools you're using?
Yeah, and I'm really glad you brought that up, because that's where I was actually going to this. So, you sort of, I was trying to see like, how do you kind of leverage like the stuff you've learned in your career as a founder to help you be effectively a better investor and things like this. So you just mentioned like the platform risk, right? Like if you sort of built your entire business on top of OpenAI, and you probably have seen this before, right? The App Store, whatever, like whatever it is, right? Like there's lots of things like this that have happened historically. But Pratik, anything that from your founder background, you sort of, obviously you kind of always go back to the problem solution, but anything that you sort of leverage as you sort of make decisions, and how has that inspired your kind of investment style?
Yeah. So Mike, with my focus on like broadly in the B2B software space, I actually pay a lot of attention to builders, like founding teams. It doesn't have to be the CEO, but founding teams have to have like a deep building ethos and belief. I think if you're kind of trying to solve a technical problem, if you're trying to build a product which is scalable, which will be kind of used by the top industries in the world, you need to kind of build deeply. You can't like come up with like shallow solutions. You can't kind of build like a cool marketing collateral and kind of like just kind of rely on sales to grow. So like that deep heart of building, that's something which I pay a lot of attention to. I think that's where a lot of long-term value kind of gets created. And with that lens, I end up kind of focusing and indexing on founders who've had like demonstrable experience of building and shipping. I have like this natural gravitation towards almost, I'd call them nerds who kind of understand business, but also kind of deeply understand what they're building, why is this important in the world. And with that at the core, I think a lot of other problems are kind of downstream and they can kind of get solved well. So I kind of really gravitate towards that. I think, like as you kind of rightly said, that kind of it might reflect who I am and like what my kind of founder journey was like. So it kind of really starts at the core of like, what is this thing? Like, do you understand this well? Do you understand the problem well? Do you, in some ways, kind of love the problem enough while not being over attached to the solution, and bring that to whatever you're building, whatever you're kind of bringing into the world? That's what I really care for.
Yeah, and John, in your case, obviously you tend to work with people like you, because you're building this for people like you, right? So everybody's sort of already almost by default experience, and that certain founder archetype needs different things, right? And so I'm curious to see how you sort of think about this and how it sort of affects the way you sort of invest as well.
Yeah, I mean, it's very interesting. I mean, so I literally just, flew back from Japan. I was there, just flew back, less than 12 hours ago now. And it was, and the ecosystem is a little bit different there. I think a lot of the investors come from a finance background. I mean, there's not that many kind of founder builder type, investors there. Many of them come to finance. And so I think it leads to a lot of downsides. I mean, I think that that's, when, at the beginning of my, my entrepreneurship career, I didn't really give much thought to who the VCs were. Like, oh, what were their backgrounds? It's like, okay, are they well known? Who else did they back? Like, that's the kind of stuff I looked at. Now in retrospect, I mean, having done 3 of these, it's like, I've very heavily prioritized ones, at least in the early stages of fundraising, right? Later stages are a little bit different, but like in the early stages of fundraising, really prioritize those VCs that are and investors that have like not only operational experience, but founding experience. Like they've been through this type of stuff before. And just in terms of the idea on AI, I mean, the one observation is this is a great time to build. I mean, this is like we're this interesting time in history where there's major new capability in generative AI, foundational models. No one really understands what they're capable of, even the people who are creating the models. But I think just about everyone agrees like these are going to be really, really important. And so because now it's a great, the builders, they can explore the capabilities of these systems, also becoming fluent, like fully fluent in like Gen AI, it's like a superpower. I see these startup founders now that, it's a 4-person team and they acting like a 40-person company because they're fully AI native. They're fully embracing the tools, not only for their products, but for many other parts of their business, as well, right? And because it's so new, the best way to learn is to try to build something real, and and so that like very much heavily believe, agree with Pratik here that just focus on the builders. And there's tons of excuses why you can tell yourself like now, like why not, like now is not a good time. It's like, well, look at all these tech layoffs, I better keep my job, or like, hey, Gen AI is so overhyped, there's too many startups and that sort of thing. Or, oh, what's the business model going to be? And my dependence is going to be on OpenAI. That's that there's so much risk there. Or like incumbents have advantages. How are we going to compete against Google? They have, or Meta. I think heard Mark Zuckerberg's buying up all the GPUs. There's no more GPUs. So, how are you going to compete in that space? And like those are all true, but the truth is, if you're entrepreneurial, you have ambition, you have conviction on some idea, and you're at that right life stage where doing a startup makes sense, like now's a great time to do it, right? And I think that the ones that those type of people will be gravitating towards are other builders, and people who kind of understand that building ethos. And the big winners in the future, they're not going to be some like market research focused groups. They're going to be the ones that are come from like these AI. They're going to be fully AI native companies, and they're like where they're reimagining these industries and like building novel capabilities, and like those things are going to come from the builders. So
everyone, if you have questions for Linda, for John, for Pratik, there's a Q&A button at the bottom of your screen. Please add them in there. Upvote them. I see there's a few that have already started to come in. I've got a few more questions for the panel, but I really want to start getting in your questions as well to the panel. So if you have questions, this is a really good time to sort of type them in and ask, because I definitely want to make sure that we are doing this for you, right? So I want to get your question in. So, for the founders in the audience that are sort of thinking about like starting a VC firm, or are going to start a VC firm right now, or want to sort of kind of get on the journey that you have seen, I'm just curious, what are some of the biggest challenges that you've seen in sort of making this transition, right? It's different, right? It's still a business, right? But it's a different style of business. The startup is like kind of all growth, the fund and the firm, it's like much more about like managing money properly and things like this. But I'd love to get your views, and maybe we can start with you, Linda. What were some of the biggest challenges for you as you sort of transition onto this new style of business, which is a VC firm?
Well, when we first started thinking about it last summer, we didn't know about VC Labs. So we were starting at ground zero, and it seemed so daunting. And we started to look at, what are all the different things we're going to need, like a CRM? And we started looking at all these companies that provide the tools to support venture. And it was a quagmire. And so I would say when we found out about VC Lab, that was like the dawn of a new day for us, because there were so many benefits to being part of the program. And getting through that program, though, was, I have to say, a huge challenge. And I don't have the numbers off the top of my head, but we were in cohort 13. I think 2,700 funds applied, a little over 200 got in, and only 50 of us survived the boot camp that you guys put us through. But putting us through our paces like that was the best thing, because, and we talked to budding managers who didn't make it through the program, and it was for a variety of reasons. I think part of it is you have to go into it with a very long-term view of this is going to be for a very long time in your life, in your career. And then also, do you kind of have the ability to support yourself while you're getting started? Because it's, you're really funding this just like a startup. And if you're not getting the LPs coming in and you don't get to that first close, I mean, these were the things I didn't really understand about how VC actually functions. And so I think that ends up being a challenge for a lot of people. But, again, I think the VC Lab program really put us on the right path. And it was so great to be part of the working groups within your cohort. You meet great people, you can share, what your problems are that you're facing, and really talk it through with other people. So cannot recommend it enough.
Thank you. Really appreciate you
Mhm.
and the kind comments. Pratik, what were some of the biggest kind of differences, right, or maybe challenges that you had, kind of going from sort of this founder kind of mindset to like starting a VC firm?
Yeah. So, Mike, I actually faced a bunch, like this big question about like what life is going to be even before I kind of landed up at VC Lab. So there was a 6 month period where I was in like this deep introspection mode, thinking about like life, or like my startup life has ended. I've kind of been doing angel investing. Do I want to do another startup? Do I want to kind of just do angel investing and chill out for some more time? Or do go down this VC path? And there's this kind of deep introspection of really digging deep into who I am and what do I want the next decade, maybe a couple decades of life to be about. That really informed the decision to go into VC, and so that kind of eased a lot of existential questions I might have faced down the line, because it was kind of grounded in kind of really this deep introspection. But then actually building the fund and really kind of coming into the job had its own sets of challenges. So for me, probably like the biggest transition and challenge was how lean the VC life is, like the founder life is. Like I had a co-founder, I had a team, I had a bunch of advisors, and so it there was like high velocity, but there was also like a big pool of people. And the fund, I'm kind of doing this as a solo GP. So it's me in my room on my Zoom, like talking to a bunch of founders and advisors all over the world. And so it was a very, very different journey of kind of really, in some ways, kind of going inside your mind and then executing, which was a very it took a while to kind of make that transition happen. And yeah, kind of echoing Linda, have huge appreciation for you and Adeo and kind of the VC lab structure, but then also the cohort, which kind of really got me through the journey and I think accelerated this period, which otherwise would have been a massive drag. So really, really appreciate all of that. So that was that. And I think the other big transition from founder to VC life is, and I don't know, like if others will kind of appreciate this, is that like VC, as compared to a startup, feels like a lot more of a commodity business. There are far fewer levers to kind of really differentiate yourself. Because like as a founder, you can think about technology, you can think about specific strategy, you can kind of hire very specific talent. VC, there's only like 2 or 3 things which you can kind of really play with. And so really think understanding and internalizing, saying that, oh, this is what the business is, this is how you kind of create space for yourself and kind of creating or allowing a bigger, like a longer timeline of coming to whatever outcomes that I want to kind of create. Really internalizing all of that was a big transition. And I'll pause there because I see Mike smiling at all that I was seeing.
I just remember doing office hours with you, man, and you're like, just all alone, like, what do I do? It's like, yeah, so that's what we do, honestly, office hours. I feel like half the time I'm doing office hours is more just to be like, it's cool, man, you're all right. John, look, what were some of the challenges that you faced kind of going through this? Because you were kind of very systematic about this. You had sort of the accelerator and then the fund, but still, like, it was pretty
Yeah.
transition.
I mean, for us, like I mean, the biggest benefit that we got from VC Lab, honestly, was like the accountability and the deadlines that were there. Because I mean, there's a kind of thing that like, yeah, there is a whole lot of work in order doing it. I mean, it may from externally, it seems like, oh, this should be easy, right? We just I know some people with money, like they'll give me money and then I'll invest that money. No, it's like there's a ton of work involved in that. And I know I've known quite a few people who have been VCs in the past and have raised funds and everything. And it's like, okay, I knew that we could get there, but but like just having that structure and that accountability, and most importantly, those deadlines, like that was essential for us to actually make progress on it. Right. And then also cut out a lot of the BS that was just like you can waste a lot of time if you're not careful about it, you're kind of wasting a lot of time on things that don't matter. And just, with the VC lab thing, you just focus on only the stuff that matters. So that part is great. I think that the biggest, I don't know, surprising thing around this transition was that, my image of like how I would spend the time doing and where I'd spend the effort was very different than reality. My image was that, okay, most of the time would be spent on, sourcing deals, evaluating deals, like, and helping founders, like that sort of stuff. I had just, it was not even on my radar around the whole kind of LP side of this as well, which is like a huge amount of like time and effort like goes into that, right? I mean, not only in terms of finding the right LPs, but like, keeping them up to date. And, because, the relationship with the LP there is a special one because, we're effectively telling them, hey, I want you to give me your money and I'll invest it on your behalf for the next 10 years. And, and then you'll trust me to do that. And, and so it's much more relationship based. It takes more time, as it should. And you should be careful about who the LPs are that you are recruiting and having as part of your fund, because it's a 10-year relationship at least, right? Potentially longer, right? Or ideally longer as you go to further funds and everything, right? So this was a piece that kind of I had not kind of anticipated as much, but I think this is actually like one of the most important pieces of like kind of being a fund manager is the LP and LP relations. And so that was kind of a learning experience for me.
Lots of interesting questions coming to the Q&A. This first one is for me because it's regarding FINRA and the SEC and stuff like this. So let me just take this one before I go. But basically, there's I'm a CFP and founder, blah, 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 of this group. And what FINRA SEC registrations do we need? So this is one of the things we see a lot with people of your kind of caliber. They try to do this stuff themselves. Do not do this yourself, okay? You're going to have to hire a specialized fund administration as well as specialized lawyer that all they do is VC to do this stuff, and they'll take care of all the stuff for you. And yes, you're going to have to file with FINRA, you're going to have to file with the SEC, you're going to have all this stuff, but they're going to take care of it. Please don't do this yourself, okay? This is what these people do day in and day out. They have a system around this and all that. So yes, you're going to have to do these filings, but I would not do this yourself. Okay. You're going to hire a back office provider as well as a law firm, and the law firm needs to specialize in VC. Do not work with law firms that are just like, hey, I'm going to do a bunch of hedge funds and all these other things. VC is very specialized, do that. Question for you, Linda. And this is around the Mensarius Oath, which is pretty cool. Any practical ways that you sort of operationalize the Mensarius Oath in your process, in your investment process? Anything you can share with the audience on that?
Yeah, well, it kind of comes in two buckets. One is where we choose to invest. And after grinding it out in the US healthcare system, we've come to the conclusion that we don't believe the US healthcare system is actually an ethical entity. It bankrupts more people in the country than any other problem. We just feel like care is not where it should be. The insurance providers, the PBMs, I mean, it's such a huge, colossal mess that we just fundamentally don't think it makes sense to invest into anything that further props up that system. So that's more like investing philosophy. But then it just comes back to how we treat founders and how we interact with them. Just based on some of the behavior that we received when we were raising funds, we just feel it's so important to be honest and to be forthright and to give them advice. Even if we don't invest, we want to try to be helpful from our perspective. And so that's something that we felt right from the beginning, that we wanted to differentiate ourselves, that we, because again, we saw so much of that behavior. There are some great VCs out there, don't get me wrong, but and again, this idea that you're being ethical in your approach, it's about what the companies are doing. There are certain categories we will not invest in, like in supporting defense and warfare. We just believe that, yes, there will be hugely successful companies in that category, but that's something that we're just not interested in. So it comes across a lot of fronts, but I think Anil, my partner, and I were both good Midwesterners, and I think we were sort of raised with a certain belief system, and we love to find founders who share those values as well.
this is for everyone on the panel. Basically, and I'm going to paraphrase Grace. You know, like she's mentioning, hey, you know, there's AI is fundamental, as you sort of mentioned, to accelerating solutions to humanity's challenges. But in sort of your investing, speaking of like ethics and stuff, and this is for everybody, how do you sort of think about this, and how do you balance this with sort of like the ethics related to AI and the future and things like this? How do you sort of think about this in your kind of investment process, if at all? And anybody that wants to take that on, feel free.
I mean,
Yeah, go ahead.
yeah, I'll go. Yeah. So for me, I mean, both, you know, the Mensarius Oath as well as these type of things. I think it's just, you know, don't honestly don't kind of think about it that much, just because it kind of already aligns with the values they already have. And so the type of decisions that we make, like whether it's in terms of how we interact with founders, you know, what type of companies do we invest in, I think it's just natural. And my opinion here is that this is not at odds with you know, getting good returns. In fact, I think it is like actually essential for getting good returns when you look at it over the long period. Like there may be times where in the near term you could compromise on ethics, or you can compromise on these other type of things. And yeah, you may be able to get a short-term profit, but that is not the way to build like, you know, sustaining organization like over time in terms of your reputation, and in terms of another, you know, a number of other things as well. And so I think for these type of things, like when we're looking at it, I mean, it may make near-term economic sense to do some of these, but it certainly doesn't make long-term, like when you're looking at the time span of decades, economic sense to do these as well. So I don't think it's, I mean, to me, it's not only like an ethical thing, and it's not like, well, we're going to do this and kind of forego returns. No, I think this is the path to like truly long-term, you know, sustainable long-term, you know, organizations and returns that, you know, that will, you know, end up winning, you know, over the, you know, the time span of decades.
Yeah, I'd actually echo what John was saying, that I think the job that founders, innovators have is to kind of build the next layer of innovation. You have to kind of, the same values that you kind of exercise everywhere else. You have to be transparent, you have to be honest, you have to be clear about like what you're offering, what you're expecting in return with all your stakeholders, whether it's a startup kind of selling to a business, whether it's a business kind of interacting with customers, like you kind of interact the way as you would with any other human being. And I think the driver of innovation, the drive of kind of creating a brand new solution, a brand new way of kind of solving a problem, a brand new way of maybe even eliminating certain types of jobs that humans have to do, it might feel very weird, saying that, oh, like I don't know, needed X types of designers, and like through this new technology, maybe those jobs go away. But the fact that some jobs are changing, that doesn't mean that humanity has fewer opportunities. And of course, in the short term, there are these weird pockets of inefficiencies. But as a startup and as a founder and us as investors, we have to kind of back innovators without kind of compromising on ethics. So I also kind of focus a lot on folks who are kind of upfront, transparent, ethical, while kind of really pushing forward on innovation. I think on an ecosystem scale, more innovation, more invention will solve problems better. Like that's what I truly believe. That's why I kind of live and breathe in the startup and the innovation world. So yeah, that's how I kind of make sense of it.
There's a really interesting question here from Kanan, and I'm gonna paraphrase this a little bit, but you know, we've obviously spent a lot of time talking about the innovation side of things, but we've also spent a little bit of time speaking about like founders, right? And everybody here, obviously you invest very early, pre-seed, a lot of times maybe seed. So a lot of the decision making, I would at least think, is a lot around like the founders, the team. And so what's the right balance, you know, between like between the team and like the technology, right? Like John, you mentioned in your case, you have a 4-person startup that's sort of acting like a 40-person startup because they're leveraging AI. yet those 4 people obviously have to be pretty impressive just to be able to use it at that level, right? So I'm just curious how you sort of balance this in your decision-making process, and as you sort of look to invest in companies, you know. I don't know, maybe you start with you, John, since I kind of used you as an example, but Linda and Pratik, I'd love to hear your views as well.
Yeah, no, I mean, these, I mean, at the early stage, it all just comes down to the people and the founders. I mean, even more than the idea or the space. I mean, there is, because like the idea is very likely to change, you know, as it should. I mean, this is how small organizations compete with large organizations, is like if you have a singular idea and then you are just continue to work and grind towards that regardless of what else is happening, you're probably not going to win, because that's the game that the big companies can play, right? How do you win as a startup? As a founder, you're far more agile and jumping on different type of opportunities. So this, like, the other pieces are going to change. The constant there is going to be the people who are involved in the company early on, and so that has certainly been very much our focus, you know, on that side, just looking for the right type of people who understand where the opportunities are, how to understand how to build like great companies that are not just going to be base hits, but they're going to be the grand slams, you know, of the future. And you know, and there is, like, you know, tech is only a small part of that, I guess. It's, you know, and there's many times, I mean, the reality of successful startups is, you know, it's more like Slack. It's going to be, you know, you start out building a gaming company and then you accidentally build Slack, and then that becomes the, you know, the big winner, right? That's the actual reality of success. It's not like a straight line. It's very, there's a lot of curves and twists in there. And so you want to find a team who you feel like can navigate those effectively.
Linda, I'm super curious to hear your thoughts on this, because I mean, you know, you're kind of at this intersection of AI and life sciences and stuff. Obviously, a lot of that is technology based, but how do you sort of think about this balance?
Well, and I think this is where defining or honing our thesis really has helped us, because I mean, there are just a million companies you could be looking at in the space right now, which is super exciting. But by putting category defining into our thesis, it really helped us narrow the field. And what do we mean by that? Well, it's a company that's solving a really big problem, and that we believe they are going to be the king or queen of that new category. And so that it really helps narrow it down in that sense. And then looking for teams that really will be able to carry that ball and create that new category. So it's sort of like putting a puzzle together a bit, but it's, you know, it really helps with our honesty back to founders. Like if they've got some new drug candidate that looks super exciting and it's a very specific treatment that they're looking at, or a disease focus, if that's all they're really talking about, it's more like they have a bit of a pipeline, but that's not really category defining. And so I think this really is great for venture people getting into venture, is what is your thesis and how do you stick to that? Because then that really helps narrow and focus, and then really try to find those companies that really fit that. So it's really been a great process to go through to get. And we spent a lot of time in VC Lab. I mean, at the beginning we were like, what's all this talk about the thesis, you know? And we thought we had a great one to start, but that was, and with our working group, that really helped us in defining that and to coming up with a plan then of how to find companies that fit that definition.
Pratik, love to get your view on this too, but
Yeah, so just quickly adding on, I do think that I invest fairly early, and founders are kind of really at the heart of what I evaluate, what I look for. But I also pay attention to both the market that they are kind of playing in terms of what's unusual, what's special, why now type question, and also the question of like a fit, like, is this founder the right person to build this particular company or go after this particular market or solve this well? Do they have a right to win? I think a bunch of these questions, and in some ways, I'm kind of stealing Linda's metaphor here, like the puzzle has to come together well. Without that, like the incomplete picture, the incomplete puzzle, that's not very attractive, appealing to me. I'm kind of looking for founders who are great, of course, have fantastic backgrounds in terms of like what they've actually built and done, but that has to be matched with a market which is at an inflection, and founders have ability and to execute and actually win in this market. So I actually try to kind of make sense of the whole puzzle.
Yeah, founder market fit is a huge component of this as always, right? So yeah. There's a question here for me. This is about like kind of my comment around the problem solution mindset that I was kind of giving you some stuff for Pratik. And it's like, hey, can you elaborate why it's not the right mindset for VC? In general, VCs can't really solve a problem, right? It's more of it's a vision opportunity. Like, here's this market, let's sort of empower it this way, right? Because it's the founders that are typically solving the problem. That's why, if that makes sense, right? It's really hard to kind of come at this and be like, well, there's this, like there's a problem like this, and then you sort of solve it. But that's all. Not much else. One of the last questions we like to ask on on webinars like this for the audience, and then maybe Pratik, we can start with you on this one, is given what you know now, right? Like, what are some things that you may have done, consider doing maybe a little bit differently when you first started? Any thoughts, any comments on that?
Yeah, I think maybe the clearest advice I'd give myself when it was kind of just about starting off is like trust the process. A lot of early angst for me, like while building the fund, was just like these questions saying that, oh, is this thing going to come together? Will I get enough interest? Will I be able to attract the right founders? And a lot of those signals are kind of so far out that you don't get any short-term feedback, and that can be very, unsettling. And so the feedback for me would be that, okay, this is a long process. It takes time. Trust the process. Wake up, do whatever you need to do. If you have to kind of reach out to LPs, if you have to kind of do some marketing, build a plan, follow the plan, do it after they review it 6 months down the line. You don't have to stress about it every day. You can stress about it on at your quarterly review or your 6 monthly review. Just do the thing.
No, it's true, man. And it's especially with you, like I remember like you just kept grinding, right? And then eventually it sort of came together because you sort of just kind of put your head down and trusted the process. John, any comments on this?
Yeah, I think when just reflecting back, I think that there just to take a really longer term view. I mean, don't get caught up in the, oh, let's make fund one and like, oh, what's the AUM going to be? What's the economics going to be of that fund? Like think beyond like fund one, because if you're going to actually be successful, like the best way to do it is actually just have a really small, tiny fund one that like, so you can really focus and like completely knock it out of the park with that one, and then go on to fund two and fund three and beyond, right? Because because if you try to be kind of too ambitious early with your first fund, you're just kind of setting yourself up for failure and just a lot of pain and everything. So just like and so when you think about it, originally it was like, oh, we'll do a fund, and like actually the right way to think of that is no, we're not just doing one fund. This is a start of like an enduring set of funds that you want to do, right? And then when you think about that and that context, well, yes, there's going to be, we're doing fund one so we can get to fund two, and we're doing fund two so we get to fund three, and then once you have all these funds stacked, then they actually starts to become pretty interesting, just from in terms of an impact thing. But like, you don't start by kind of biting off the big piece. You start by let's do a really small fund one where it's a super focus, and we're going to make this like so successful that it's going to set us up for further success in the future.
Linda?
Well, I think, and this was partly going through the program, but there was sort of this emphasis on what stage do you invest in? And then we started to see companies that kind of had hit that wall, that there was no funding out there, they weren't able to raise, and they were at a bit later stage. But we decided to stretch our investing thesis toward something that was a little later stage, but all the fundamentals of the company were so exciting, and we felt like it was just a great opportunity. It was a Series A, which we don't tend to invest into, but I think being a little bit flexible and going kind of company by company to see what all of those fundamentals are they there? Do we feel good about the team? And then, and then being willing to kind of branch out beyond a super narrow focus. So that was kind of insightful for us. And a lot of it has to do with the economic times. I think we're getting through that now. We're not seeing the down rounds we've been seeing, but the bottom line is just a great time to be investing. And there are so many great startups out there where, if they were stumbling a bit, if they've got everything there, just the infusion of cash can just put them on a rocket ship. So I think just a little bit of flexibility around the investing thesis in terms of stage.
Amazing. Pratik, John, Linda, thank you so much. I can see some comments already in the chat. Everyone's super thankful for this. Everyone will be sharing this recording with a lot of people registered for this. So we're going to be sharing this recording. And thank you to all three of you. I've learned a ton from you. This was epic. Really, really appreciate you taking the time. Thank you so much, everyone. Enjoy the rest of your day. Bye, everyone.
Thank you so much.
Bye.
Bye.